We're looking for trading opportunities in the market's best momentum companies, and we look for the common factor that all these leaders share before they become the market's top performers, and that's being on the launchpad. We have a list of 30 companies in each of those two columns. Gary Glover's been through, and he's going to share with us the charts, the setups, and the similarities that he looks for when trading these leaders. Also, we've got some questions from the channel's top supporters, our members. Thank you very much, members. We're going to cover some of those as well today, some of the charts that they've asked for. Now, this video is published on Fridays, and it's a list that Gary gets on Thursdays. So those members get this whole 30-30 list on the Thursday at the same time Gary does, which is after lunch on Thursdays. If you want that, or you want to talk about some of the charts and see what the insights are, join below, and we'll get to it in the next week's video. Now we're over to charting. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
So this week, well, it's still a bit of movement in the market, Aussie, US, and still the smaller companies whipping around a fair bit. When you look at the top momentum companies on the ASX, is there a lot coming out at you in the 30 list this week?
Yeah, I mean, there's still sort of pretty strong names there. There's still a few, still getting some big sort of pops here. So still some, yeah, I mean, it's sort of seeing some of those names in the strong sectors there, but there is a few stocks surging, smaller names and newer names in sectors that are under the pump at the moment, which is kind of interesting. So is that they're showing relative strength versus their sectors, so that's always a good sign as well. So, but yeah, probably a little bit happening on the sort of smaller side here, but yeah, there's still some pretty big moves there. So, yeah, got me looking up a couple of these names here, what they do and stuff there, because I think that's always important. If you see something that does sort of stand out, trading up big and big volume, it's worth having a look and sort of seeing what sort of sector they're in, who they are. I like to look at sort of the market cap. I like to see, the insider holding as well. So I like to sort of, like if I see something looks excellent, then I see that the management only own 3% of the shares, then I'm less enthused. Whereas if I see something I really like a sector, and I see that, the MD's holding, of the founders holding 20%, and then the rest of the management are holding 10% each, and then say 50-60% of the shares are held by insiders, so that's interesting. So, some of the bigger moves come from these tightly held names and the thing about people don't realize is that when they're tightly held and they're newer names, they're usually escrowed for 2 or 3 years. So,
it locks up the supply, right? It's been dumped on the market.
So at the moment, obviously, everyone's amazed by Goodman Gomez being up so much, but the reality is, I think 60-70% of the shares are locked up. So you're only only a small part of the company travel, and then that's how all these big names start off. So you don't have enough supply coming on shares, and demand is pretty high. So that's what you're be looking for. You want to be looking for that sort of scope there. So having a look and see if you can find out what insiders hold, I think that's really important there. And I know some people look at when directors start buying shares and stuff there. I saw a study during the week actually was saying that the buying is not that important, the selling is more important. So when they're selling, that's when you should be selling. So, but not necessarily they do the buying all at the right time. So yeah, interesting.
I think there was a Queensland trader going back about 20 years, and he had something called the Nielsen indicator, and he would watch just the 3 wires and keep a track of all of that insider movement. But we're digressing. We're looking at LRV, which is the first chart you've pulled up here. Explosive movement, middle of August to 12 cents, shooting up to 40 cents, getting a little bit higher. So far, it's congested north of 32, 34, just coming down, looking at the lows today. Is this a candidate for a high tight flag, change of character? What's popping into your mind when you see this chart?
Yeah, so we saw a bit of a gap up here early in the piece. There's some good volume, then it retraced again, and went to a new high, and then traced there. And the whole thing started to tighten up again. It started to break out, and some okay volume there. But then we've had some obviously game-changing news there, and the stock's taken off really aggressively. Think about this, this has sort of gone from 12 to 44, so that meets our our 100% criteria, Chris there. So we look at the biggest movers historically. They all start with at least 100% move, and it's just some of the strongest names ever, move even stronger as well. And I was listening to David Ryan's son, Sean Ryan, and he's not, he studied the Cancel, but now he's not looking at fundamentals. He's looking at the strongest movements on the board. So just trying to find those bigger moves, bigger powerful shifts there. Because he sort of said if you get a 50% rally, then it contracts. You could get another 50%, or at least you get another, say, 30%. And if you get a 100% rally, then maybe you might get another 100 or a 70%. If you get a 200% rally, maybe you'll get another 100 or 150% move in the next move. So you're going to be looking at sort of those ones that move the most aggressive, because when they do pause, they are going to go again. They're going to move in tandem there, whereas like a BHP is sort of only moved 10% generally throughout the year. It's probably got a slightly larger, maybe 15% decline at the moment, but that's as big as it's going to get for that sort of stock. So it is worth looking at the bigger names there. The interesting thing here, Chris, is you've seen some pretty decent volume all the way up here. This is one day of selling here, and then we got a bullish, recover the next day, and then we just saw 2 lighter days. Then we're seeing 3 heavier days here, and then the last 3 down days we've had 1, 2, very little volume, and today no volume as well. So the interesting thing is it's pulled back here, expanded to a new high. Probably want to see it, contract to a new low as well, which it sort of probably has done on the inside here. So yeah, it'd be nice to see this use a bit more time here, but this stock definitely goes on the radar there now. I've actually set up a new watch list here, Chris. It's probably timely here, and I've called it the 100 Club.
Okay.
Not after the TV show, but after stocks that have had a more than 100% surge and are in that contraction or phase, or maybe they've already had a 100% surge and a contraction and made another 100% as well. So I think number 6 on the list there is the LTP. We saw that stock have a 100% surge, or went from 20 to $1, so went up 5 times, so 500%. Pulled back here, half of that, or probably less than half of it tightened up, and then now it's gone from 70 cents there up to $2 or $2.10 or something there. So it's got up 300%. So that's what I mean. It's got up 500%, 300%. This what I mean. That's why you're looking for those bigger moves, because when they move again, they're going to move comparable to the previous moves, not comparable to the average stock out there. So I think I sort of said to you last time, I thought this around $2 there was around 1.68 times the length. So we're just from an LA perspective as well. And just noticed that it had, it's been a bit hot here. One thing I noticed with Findy, FND, which was one of the ones that we covered in the model book, probably a similar sort of looking sort of chart, quite explosive as well, is it did have these sort of run up and pause, and then run up and pause, run and pause. And I had a few of these. And then at some point it did go through like expansion. So it would have it would either have like an ABC, or it might expand, ABC as well. But it would definitely have a larger 3-wave decline here. So I noticed this has just had a 1 leg down here. So if Findy's any example to go by, they'd be look for, a lower high and then another pullback. So, but it might need to use up more time as well. But at the very least, that Findy, which was one of the strongest stocks there, it had a few little ABC or 3-legged pauses, before it resumed the trend again. So, if they do get a bit, because this is sort of like this little 1, 2, 3, 4, 5, 6, 7 wave sort of setup in there. So that's so you need to have a bit of, need to have some, I don't know if you'll get like a long pause like this, but you just might get a bit of a square pause as well. That's just looking at the Findy example and looking at a couple others that remain strong here. But you can see here, we're sort of trying to bounce here the last couple of days, Chris, a lot of the volume. So you can see the volume. Yeah, so starting to lose a bit of momentum here. So, but looks been pretty robust there. Might just have a little ABC and then resume here. But I think one thing I noticed with those Findies was that it did have a bit of a most of those ones here had the little ABC, did tighten up some stage and then they can go through. So you can kind of wait for the tighten up here, so you don't have to rush in there. So I thought that was interesting. Number 4 on the list was EZZ. You know, been a good stock this one, Chris. Been on the list for quite a while. Going to have that surge, a bit of traction here, burst through, come back and retest it. Had a really strong surge in there. I think we did see a little VCP cup and handle in here. The whole thing tightened up and broke through, you know, even coming in
under 120.
Yeah, even in coming in late here around that 110 mark there, you know, instead of pretty good moves, under $3. So had a pretty good surge there. Literally went from 110 to sort of 235 or something. So that pretty much hugged the 10 for that. Pretty much once it broke out there, didn't break the 10. So if you're using a 10 or a 20 day moving average there, you would have been, if you're using a 20 there, you would have tightened up towards the end there because you've been running a lot of days above the 10. So you should really be tightening up there as well. But done another little cup and handle in here as well, and then it's gone through. So still pretty robust there. Yeah, looking a bit long on the tooth, but we know long on the tooth can
Get longer.
So it get much longer in the tooth. So, but you normally after the thing about this here now is it has gotten a bit vertical. You've seen every time it gets a bit vertical, sort of scoops up, it will have a bit of a breather. So it even up, it gets a bit vertical, so you will go through it. So it's all about watching this now, see if it contracts, use up a bit of time, sort of squares off, tightens up, and then 10 tries to come through. So just got to wait patiently there. NOX, bit small this one, Chris. Looking okay there. Look like a big cup here. Maybe it'll go up here and 14 there. Maybe it'll, develop a handle there. There was good volume on his first leg. Less volume there. So just a little gappy for me. A little small for me. But one to keep an eye on there. Maybe it goes up here and then maybe forms a handle. So use up a bit of time. BIO, thought this is another one that's, similar to that EZZ. It's been on the list for a while. Even though it had a bit of an overbalance there, probably the biggest correction on the move there. And there was a bit of selling in that. It has recovered here back to a new high there. So the only thing I would be mindful of is just that correction's quite large. It's a bit of an overbalance of the trend. So oftentimes the overbalance, they'll either come up and make a lower high or they can break to a marginal new high. So, but the trend's still pretty robust. It's probably one I'd just be a little bit more cautious about there. SGI I thought was pretty interesting, Chris. This is it's kind of like I thought this was interesting sort of company there. I look, the company's been growing quite nicely, sort of gave a pretty good update there recently, sort of reported pretty strongly. More importantly, gave a pretty good forward guidance as well. So pretty robust 25 numbers. I had a look at, they're kind of like in that, best way is sort of like almost like a mini Bunnings sort of coats higher. So do a lot of
industrial services, auto.
Yeah, it's
a really big mix of things that they have. Things they've got pies in. Yeah,
there are heaps of brands here. I think, if I'm not mistaken, I think Total Tools is one of the brands, and then there's fasteners and so it's got plenty of different names there. Do like the company name Stealth Group. That's kind of cool. But yes, probably want to keep an eye on there just because it sort of has been growing there. It's a little bit, sort of segmented, different names and stuff there. So maybe, potentially get rebranded. Never know. It might end up something like it could end up sort of larger here. Obviously got some reasonable growth plans as well there. So we sort of know those sort of rollout names that they do have some, decent growth longer term. So probably want to keep an eye on there. This sort of came back and maybe sat on top of that breakout there around 28 cents there. Probably we want to keep an eye on there. So I thought it was sort of solid. B4B, before pay there. Obviously we're seeing a lot of the,
your tyros, that kind of
thing. Yeah. So look, you got a little cup and handle up here, so there's a little bit of went up to the high, stayed nice and tight there and broke through. But yeah, you're saying Biro, Hum.
Is there a few in that space? Just along with Self Group. It's another one that came up this morning.
Yeah, I think Zip's been pretty robust as well. So, so lots of sort of strong names in there. So that's always good to see the sector sort of strong and robust get going there. WTN, so yeah, I mean, it's interesting there. Obviously, we talk about property trusts, much of it pretty boring there. About 6 weeks ago, they get the launch pad all in gusto, and then they've all gone on with it. I mean, some of them have been a bit dull, but lots of them had pretty good runs as well. So it's been, if you pick the eyes out of it, they would have got some pretty good moves there. There wasn't, I think the other thing I noticed this week, Chris, you had some, well, the travel wasn't in the top 10, but they were littered through the sort of the 30 and the 40s there. And there's another sector in there as well.
The Launchpad had tourism, which Flight Centre was ranked 33, and then a fair few in the 40s and 30s and 50s that you just said.
Yeah.
Food producers are pretty heavy on the Launchpad. But diversified property was still ranked 50 through 100. There's still a lot of those in there. The LP listed property trusts and the shops and the retail, the offices, a lot of overlap, but they're still in that space. But in the momentum, there was, like you said, with B4B and Hum, and then that retail space connected off the back of the retail, which is interesting considering the economic data that we're getting out. But
yeah, that's right. So you think, obviously with cost of living sort of pressures and rates not likely to come off here, then you sort of think that sector's going to pressure there, but the market
share price says otherwise.
Yeah, exactly. I was sells on the number 15 on the list there, so I noticed that's been pretty robust there. It's had a pretty good move there, Chris. So
that's 100%, and in the top half, it's coiling.
Yeah, it's funny. I sort of drilling into it's a bit of a tight one there, but a bit of a level in there. I was sort of having a closer look at this period there. A bit of a tight sort of consolidation under that, under the resistance there. So it's at around about 1.4. So it's staying nice and tight in here. So yeah, I think there might be some one of their FDA notices due next week or something there. It might be, the share price action is getting a bit excited there. But so that potentially could be good there. But I just got to remember, I think ACW had ran up there, on the view that we're going to get some big great news, and then it can disappoint. So probably the volume's probably been a bit more stronger in this one here. I think that ACW, the volumes are pretty light, really. So not that strong there, where I think the volumes have been a bit heavier in here, so that's probably a bit more constructive. AAR, I thought that was pretty interesting, some big volumes coming in there as well. Been pretty strong, bit smaller name, but again, kind of building. And thought that was Astra Resources. They just some sort of heavier volume through there. Bit of a breakout there, but again, probably a bit small for me, so probably just watch a bit longer. SMI, thought that was pretty strong. Still some sort of heavier volumes there. There's that, that really strong move, and then you go through that sideways, see.
It's 100% rally, and then continuing, coiling.
Look how long
pullback in time.
Yeah. So February, and we're running all the way through to probably, to be honest with you, if you're looking for like a V-wave break here, you're not getting any V-wave break until July. So you're waiting 5 or 6 months, 6 months there basically for a little bit of a breaking above a high low. And then even that sort of still starts to sort of slow, starts to accelerate there. It takes a few months to get going here. So, but that sort of big move, that sort of contraction, sideways contraction is sort of, that big base there is sort of what you want to see. So, this is probably, sort of Stan Weinstein sort of, that's, they're sort of coming out of that sort of stage 2. So you've already had that big surge there. So moving averages, the wind back, having a bit of a pause there. And then you're sort of breaking out for that, another sort of stage 2 sort of move here. So, yeah, there's sort of ones to sort of look at there. I've got a few that I've been watching there for a while, but there's one that I've been watching quite a while, sort of come down the bottom of the range here, but I feel like it's going to be months away before it's even sets up. So just going to sort of keep it on the sidelines there. What else we got there? ABM, it's just one that's been pretty robust there, pretty decent volumes all the way across here. So
when you're looking at a chart like OBM, that's been pretty consistent. Looking at the 50, it sort of touches it fairly, but stays above it. Would you rather be trading in something like OBM or something more explosive with the 100% move and then that consolidation for maybe 1 or 2 months, or 6 or 9 months, and then go for another explosive? Which would you rather be?
Yeah. Well, I'm trying to go more explosive there. Yeah, trying to stay with stronger names. Trying to play a little bit high beta. We get more risk with that, but you manage your risk, and if you're sort of trying to build in a position, so you're only going to build if it moves in the right direction. So you're starting sort of small. You're starting, say, with a 5% holding. And you're only risking a quarter of your risks there, say 1% or so, or maybe half of 1%, and then your risk is still pretty small. So, and as that position builds, maybe your break even moves up, and maybe at 3/4 of your risk, and then maybe if you get to say 15%, then maybe you're getting close to your 1% risk, and then it moves high. Then you move the whole you can get the last parcel on and have it all, have your break even there, still sort of sitting at less than 1% risk. So that's the sort of job there. But if we get that sort of bigger move, it does sort of help there. But you still got to look at the environment as well, Chris. I mean, if it's sometimes we sort of know if the market's going through a bit of a tougher environment, some of the stocks that might be moving probably going to be those less explosive ones. So sometimes they're just sort of safer or infrastructure or property trusts, as we've seen. So there's a couple of the trades in there. I made a little bit of money there because I couldn't really see anything else more. It was better and more exciting, but ideally I'd love to sort of be looking at the faster, stronger names there, but it really does sort of come down to the market as well. EVS number 21, just sort of keep an eye on this one there. It's had a pretty good surge there. I think there was some sort of news out there for this one. Caused a bit of a spike here, a bit of a jump, so probably just going to sit back and watch that one. I noticed sort of hum there. We sort of did set up a little cup and handle there, Chris. Probably prefer to see a longer handle there. So it wasn't much of a, we sort of went back and retest the high there, done a little cup there, does a little, gaps out, little throwback just to sort of scare some people out, and then it's whole firmware. So it still looks pretty good here. It's still sort of sitting above the high here. So I've seen a few failures here recently. That's the only probably negative. So I've seen a few, but this is still pretty strong signal. That still looks pretty solid. So I mean that Zip has had a few, bad news. It's managed to sort of hold up pretty well. Even that one, I think that little throwback there, it just came back and sat on top of the high there. It's still sort of holding, reasonably tight there. So we're just going to see. I think in this moment here, I've sort of noticed that if I do trade some of the strength, leave some on. Some of it's going further, some of it's peeling back and knocking me out. So, I think it's sort of, that's the beauty of the strategy is you take, sell some profits into that heat. If it keeps going, then you can sell more higher. And then if it does pull back and knock you out, then you have you've made some money, just not a lot of money, as opposed to sort of getting knocked back out of break even and not taking a gain back at all after having a good move. So that's the sort of beauty of playing it that way. FEG, bit of a VCP setting up here, Chris, for this one. So almost did look at this one yesterday. I sort of picked some up at 18 there, but it was just a little bit small there. I like to sort of stay above 30 cents.
30 cents.
And it was just a little bit, it was a bit smaller company as well, sort of a little bit different there, but sort of someone took a strategic stake at 20 cents, which was probably big news for the company. So Yeah, bit of volume there, but yeah, it's just a bit smaller. That was the quarterly.
Okay, so they're the quarterly momentum leaders. Obviously, some of those charts are in there showing bottom left, top right, and just continuing to grind higher. Some more explosive than others. And some of them were members' suggestions to also crossed over with your list. So that was also beneficial as they were ones you were wanting to review in more detail. We looked at the Launchpad and we've got a few more suggestions and requests from members in there as well, and some overlap with ones you were looking at anyway. As you're looking at the Launchpad, this is a place where you've noted before a whole cluster of uranium companies show up in 1 or 2 weeks, gold companies, lithium companies, property trusts more recently, and then they've been in the Launchpad. The thing with the Launchpad is they don't really stay in the Launchpad. They come in for a short time, and then the theme can roll off. And as you said, property trusts, some of them really did quite well. When you're looking in the list this week, is anything standing out, or is it kind of a bit of a wash with the volatility that we had? You haven't seen a clear signal of the thematic come through in the Launchpad?
No, I mean, it's still getting a little bit of tail end reporting here. So some of the stocks sort of reported there. Yeah, there's a bit of a mixed basket in there. So still some of the just some bigger moves from sort of reporting in there. Not too many sort of sectors sort of jumping out of there. As I saw your sort of 6 report out of sectors there. So I just had sort of what travel and food and a couple other sort of sectors sort of stay pretty firm. So I thought it's sort of pretty interesting because travel's probably one that everyone thinks you shouldn't go for right now with with a
higher on the nose.
Yeah, higher cost of living and stuff there. Yeah, they've all jumped. They say they've all had a bit of a pop here. So, but it's very cyclical as well. I mean, just you're talking about uranium stocks there that have gone crazy and then had a massive run there, and they were in the Launchpad in a big way. I think it was August 22 or something there, and maybe might have been December, or might have been March 23 from memory, but they really had massive moves there, some big breakouts there. But like a lot of the commodities in the last few years is that you're coming into these things after they've had a hot run. You get so much risk here because we've seen them they've all roll off. We saw energy run hot, roll off. We saw gold run off initially and then roll off a bit and then go gold. I mean, the funny thing is, as uranium, iron ore, I think, it's maybe copper have been rolling off here. We're seeing gold go up, so you're just seeing that rotation through the metals, which has been going on for quite a few years now. So that's what I mean. You're going to kind of be looking at the metals that are out of favor. They're sort of going to probably turn here rather than So we're all for going with momentum there. But you want to sort of see that big jump. Off the low, that sort of surge, then sort of contraction, and then let them go. So it's just interesting now. I mean, Bannerman, which was one of the strongest performers there last year, Chris.
Giving a lot back.
Yeah, so it's given, there's a 50-80 rule there, right, and we're already exceeded 50%. Maybe we're going to go 80%, I don't know, but it's had a fair decline there. So that's the thing about trading these momentum shares is that when they're done, you got to get out there. So, I mean, even if you just apply William O'Neill's 50-day moving average, that would have had you out at 420. You might have been disappointed with 420, but you look back a year later or 6 months later, and it's a 210. You think, that was a pretty wise decision. So, so that's why these rules are there. So, let's look at. First one here was ASM. So look, it's had a bit of a pop here. Possible change of character, a bit of volume there, but still pretty early, still a bit small here. But one to keep an eye on there. Just probably want to sort of see some sort of contraction there, or but okay without being great there. Number 3 is on there. This is the one that I did try to trade this actually, Chris. So I was So I noticed there when I looked at this, I thought, this is sort of, even though it's coming up a low, I thought, there's some pretty chunky volume down here. Had a bit of a surge there, and it has been sort of crossing back above the 50, and then the whole thing is pretty tight. But what really did catch my eye was more looking at the weekly. Because this is sort of this low here had come in pretty hard low, and then we saw some pretty good volume. And then the whole thing sort of held up here, same amount of time, and hadn't really moved much. And so I actually thought, there's a bit of a change of character for the stock here, staying pretty tight here. You just need to sort of see a bit of a VCP in here and tighten up. So there was a little bit of a VCP. First little break here, around 95.75, so 96 there. Then it did break the 99. I think now it's broken the 105. I think now there's, 111 was the previous high. So this is what I mean. For me personally, I sort of maybe us to sort of, get a little starting parcel here on a little B-wave break, and then add to it on each other as it breaks more lower highs. Yeah, that's a sign of strength. So you could probably add to that. But I ended up sort of missing this, and then I had other things on, and then I tried to pick some up on the retrace. Didn't retrace much, and sort of But that was sort of one that I missed, and the other one actually, which is on the list actually, which I missed as well, which was Aussie Broadband, which is number 29 on the list there. So they had a pretty good report here. So this is one thing I'm noticing that oftentimes you get that game-changing news where the stock gaps up on an earnings result and then it just runs, keeps going. Otherwise, sometimes what it does, this is what actually, you had Tyro do exactly the same thing. Tyro actually gapped up on that news with a great result, and then it came back and actually filled the gap. So it came back in a little ABC, a little three-way pullback, much lighter volume there, and then it sort of recovered there. So I was watching that ABB thinking, okay, this is going to come back here. Thought it was going to come back and fill the gap around the 322 or something like, but it just left a little bit of a gap in there. But that's often what they do is they might gap up, they might come back and then go again. That's how to study that game changer trade, Chris, as well. Sort of, I'd say most of them gap up and keep going if they're really, really strong. Others, if they have a bit of a big jump, and it's usually maybe sort of oftentimes the earnings there, they might gap up and then maybe come back and fill in a little sort of small three-wave, and then they go. So just a little subtle thing to keep an eye out for when you're in reporting season. We do see these big gaps there.
Might not have looked at it, but listening to you last week talking about the moving averages, who knows, maybe looking back over that list, if it's doing a game changer from around the 200 or above the 200-day moving average, maybe it keeps running. Those who are below, just looking at Tyro, when it announced it was just under the 200, popped up, came and closed the window, got onto the 200, which is closing that gap, and then turned around. And then ABB, just you were talking about, it's come up and kind of the first surge, that first spike sort of an announcement, just got it shy of the 200, had its retracement, didn't quite close the window fully, but sat on the swing high in July.
Yeah.
And now where it is, it's just at the 200-day moving average. I know that a lot of those Stan Weinstein stage one coming out of the bases, quite often they'll have an explosive move. When they first run, they might break a wedge, something like that. Often they'll get to the 200 and have resistance and then come back down. So quite often I wouldn't trade until it had already tried to probe the 200, had a bit of a consolidation at or around it. And normally by that stage, 200's sort of the share price has gotten back over it. And then it sort of has a reload and then uses the 200 as a base to run off it.
Yeah. I watched a few sort of Stan Weinstein videos there. And there's sort of, obviously like a lot of US sort of stocks that do gap up big there and crack the 200, particularly when they're up big on big volume.
Yeah.
Yeah, those are the ones a bit like the majority of the game changer ones there that sort of, they rarely look back. So sort of they gap up pretty strong, big volume throughout the day, and then they stay pretty robust. But I noticed that Downer was another one there. I was actually watching this one, Chris, because this was a big VC. Yeah. On the daily, then the whole thing had tightened up as well. So this is it's tight.
VCP into VCP.
Yeah. I think the weekly as well. This is the way it was all sort of sitting there was all. This thing was all sitting on top of the previous high as well, and the whole thing was just tightening up here under that sort of high as well. So this is pretty constructive. The only thing with sort of downer was there, I think the last couple of reporting seasons, it's disappointed. So that probably was a little bit of the apprehension going in here. And then obviously it's had a pretty good result then. It's hard to, do you follow that gap up? Obviously the answer in hindsight is yes. But yeah, it did have a pretty good move there. So, but yeah, I did notice that one, but did not trade that there. SIQ, just had a bit of a surge off the low here. Has gone above the swing highs there. So that's still a little loose here. So we want to sort of see this tighten up there, but could be a potential change of character there just because that's had a pretty good run. Obviously good update here, good volume there. So you want to sort of sit back and see if it doesn't tighten up here. VSL, there's a VCP in here, Chris, but it's a little loose. So this is obviously, if you look at that from that high there, pull back and then retest it again, pull back and then got retested again and now tighten up again. So it's sort of getting tighter and tighter. So they're not the best, VCPs. Obviously we've got one a bit here and then it failed here. Did see one that looked exactly like this, which was SEK there recently. Had the jump here, pull back, jump, pull back, tightened up and then here. But then it just had a little surge. So they're not the best VCPs because they're probably too loose there. So you still have a bit of a jump, but they're just not the typically sort of great setups there when they're loose. You want to sort of see that whole tightening, price tighten up a little bit more. WCN, not much to see there. Pretty sideways orientated. WIA. Thought this was sort of interesting there. Just because it has had a pretty decent surge here, pretty consistent volume all the way through. You can sort of see the green bars all the way through here. A bit of a sideways low volume through here, good volume as well. So a bit of a small name here. But then the whole thing's had a bit of a pullback there. Not too much volume throughout here. And then we're seeing the volume come back and increase as well. So, had a bit of a breather in there, the volumes again here. So maybe this sort of, maybe this sets up a cup and handle as well as WIA. So probably that looks sort of interesting. Just a little small for me, but obviously gold stock. So gold's pretty buoyant at the moment. So definitely a sector, so you want to be trading in those sort of stronger sectors. I can tell you, firstly, the best trades I've had in the last month here have sort of been trading in the strongest sectors. So, MCA a bit small. Just has gone through a little bit of a B-wave break here, maybe, but too small for me. It has been really trending down here as well. So I prefer to sort of see this sort of coming out of a stronger base, going through a sideways consolidation. What else we got there? ARF. That's just another one of the property trusts that have been pretty buoyant. Whole thing's tightening up under the high, Chris. So as much as it's a bit of a slow mover, still looks pretty positive, like a lot of the other ones do. AFG. This is pretty interesting there because that sort of had a pretty, pretty strong run here, and then now we sort of pulled back here. Look at that pullback. No volume. Yeah, so pretty, and then we've had a nice jump here, and then the whole thing's tightened up here. So we're tightening up here just underneath the high. So leaves it in a pretty strong position there. So I thought that looked pretty solid. SB2, Salter Brothers, I think it is. A bit of a smaller name there, but again, it's had a good surge there. A bit of
more volume activity throughout July, August, and
September. Yeah, just not big moves there. That's like 50. It looks pretty good on the chart there. It's 52 to 68. So it's not a big percentage move. It's a bit of a slow move, but it's nothing wrong with that. But it's just, so far, it's building quite nicely there. Sort of drone shield there. That's the thing about. I did think this looked okay here. Under it here, but I know that when a stock gets crunched like that, it's not going to move fast here. So again, it's not going to be a great trade. Once they have a fall like this, I hear that the best traders say this. Once they've had these big declines like this, those stocks go on the sin bin for a while. They don't even the pros won't trade them after a big decline, because they know they're going to be out of favour for a while. It's going to be struggling. So even, you can say, I made 20 cents or something, or, 15 cents or whatever it is there, but it's just not high probability trading here, and you're trading against momentum here. That shouldn't really be the go. We should be sort of trying to trade with the trend there. A4N. Look, this was interesting there, Chris, just because it has had a reasonable decline here, and it's like it kind of reminds me of a few of the property trusts as well, that they're sort of starting to base here, and then we are starting to break above here, but we've just broken above that little lower high here, but haven't broken back into range again. So yeah, look, I think it looks okay, but it's not moving particularly fast there as well. So won't get my money, but it could go up, that stock. CCP. Thought this looked interesting there because it sort of had this. I think it had the low, first high low, second high low, another high low. Still tightening up here, but yeah, I would have thought after that this was the third high low that should sort of get going here. There was some okay volume there, but it has peeled back. Obviously in a pretty weak tape here, but wouldn't want to see that break that level personally. I think, I do have a small position on this one just because I thought it was a nice sort of 0, 1, 2, 3 there. Normally companies when they report well on reporting season, they normally sort of do pretty well later on, but even though they had a pretty strong outlook statement for 25 there, the share price really hasn't got going here. So, but not the worst looking chart there. AWB is the last one there. That was it there. I think the ABL was the one that I thought looked interesting. You're going to go through reporting season too, Chris, as well. We saw, I think the MAF, that reported pretty well. I think revenue was up like 27%. I think the ABB also, I think that was up 27% as well, the revenue growth as well. So you're looking at sort of what companies have really sort of done pretty well reporting season, and then maybe they've all jumped up, obviously reported pretty well. So maybe you wait for a bit of a pullback there. So I've seen Cairo report as well. So a lot of those stronger names have jumped up and then maybe retreated, and then they can give you an entry as well. But yeah, pretty messy out there. Only piece of trading advice I've got for you this week is I was listening to sort of Sean Wright and talking about his sort of delving and trading and stuff there. And he had he pretty much blew himself up and then got a job and worked for a couple of years, and then saw the US investing championships was sort of coming up. And so, and he said, I might enter. He said to his dad, said to David, I might enter. So then, any advice? Yes, just the advice he got from his dad is, obviously, 3 times, go and review all your mistakes. So just review all your mistakes that you've made in trading and learn from those. So you got probably one of the best traders on the planet giving his son advice. That's go and review all your trades. So I'm going to do something a little bit different this week, Chris. I'm going to be a little bit think a little bit different level here, in that rather than go and review all my worst trades, I'm actually going to go and review my best trades over the last month. And just see if I could have traded them better. Because I think a couple of the biggest winners I was in there, they did kind of catch me by surprise. Even though I was sort of preparing for them, they did sort of happen a bit faster, and I probably didn't get size on that I wanted. Half of that wasn't really my fault. It was sort of rule based, and also what happened there. But could I potentially have scaled up a little bit larger? At what point? And could I have actually held on a bit longer, or traded a bit longer there as well, because I sort of do tend to trade some of the heat. So so it's sort of about maybe adjusting my rules there. So I know some of the traders there have sort of risk parameter rules around exiting. So if they just say they're risking 1 unit of risk, they might only take some off, let's say 1.5 or say 2 times risk.
If they're selling into heat.
Yeah. So what that means is, say, if you're risking, say,
10 cents.
Yeah, you're risking 10 cents sort of on your risk. If you say 1.5, you might sell it. You might sell some at 15 cents profit, or if it's 2 to 1, you might sell some at 2. Oftentimes they sell at 1-to-1, so it might be 10 cents profit, they take some off. So, but just building a rule around that, so I've sort of just got my sort of 3 to 5 day run into heat, take off either, if I can get to say 20, and then I want to sort of, try and take off 5 or 10% into heat of that, 20. So half, either a quarter or half into to that heat there, and then try and move up to follow the 20-day moving average after that, at least get to break even as well. Like, you generally find most of the best traders, they'll scale up, they'll get a surge, they'll sell into heat, and then they'll backstop the rest, and then you get nothing to lose, on the balance. And then sometimes they pull back and chop you out, and then they can go further, but you can always come back in again. So that's sort of something which a lot of the, all the traders that I've been following who've got best track records, that's definitely quite a uniform sort of thing there. And it takes the pressure off the trade as well. But then after that, I was sort of, in my head, I was thinking, is it 1.5 times, maybe take off, if you got your 20% on, take 5 off into 1.5 times your risk, take another 5 off at 2 times your risk, and then try and run the rest. And then maybe to get to your 3, you take another 5 off, and then maybe to get to 6, you take the last 5 off, Or
when you're saying 5, you're talking about a maximum position of 20% of the portfolio, and you're building a quarter of that position.
So I try and build, in 5%, 5%, 5%, 5%. So I try and build into a 20% of the portfolio. And so then I might try and take it off at 5 or 10. So sometimes if the thing goes crazy, like it really gaps up pretty hard, and I might sell half into that, say it moves, say 2.5 times my risk. I might go and sell 10% and let the last 10% ride there and just try and run the stop behind it. But then maybe, then I've noticed, I think I traded ACL was a nice one here that had a nice VCP in there. See how basically sort of pull back in here, and a nice little tightened up here. And then it was hard here because I sort of my rules for this was that I couldn't really have more than 10% of the position on before, because I had reporting season coming up. So we've been around reporting season for a long time. You don't want to be carrying a 20% position size and get a gap down and then they smash you. And then you're spending 2 months trying to
dig yourself out of a hole.
Yeah. So that's where you limit 10. But this did report here, I think I might have been this day, or maybe it was this day here. Actually, it was this day here. Now, could I have added to that? Even though, it was a good report. It ran up and gapped up. I don't know. So it was a hard one. That's the question. Yeah, that's the question I'm going to look at over this time, because it came out of there really nicely. Like it cooled in here. So I think I got a bit of a low cheat on there, and then it broke out. I added some more. So I got my sort of 10%, added somewhere down in here. It might have been a bit lower actually. Yeah. But then it's come back, and then gapped up here. So I did sell some into this heat here, just because that's sort of a bit of a level up around this sort of 3 mark, being a big move as well. But then, I probably sold, I was looking for it to go back and retest the high here, which is around 315. Sold the balance there, so maybe I should have, because I couldn't get my maximum position on, should I just trailed this, but maybe I should be back here. But it's weird, because you're sort of seeing lots of sort of movement here at the moment. It's not really, I think many would call this there's a hard penny environment. What's he call the can't remember the exact terminology there, but he'd be probably betting smaller. But
dials down his position.
Yeah. So instead of having maybe say 6 to 8% risk for a 20 to 25% move, he might be sort of down 4 to 5% risk, or maybe a 12 to 18% return. So he's just trying to aim a little bit lighter there. Still have the same risk parameters, but there's no perfect science to this thing. It's all about having a process there that you follow. And then I think how you alter the, under conditions as well. So yeah, and oftentimes the stock can come out pretty explosive as well. I mean, like the LTP, that was such a good setup there. It was such a hot sort of stock for me. I'll go back and try and review and see whether, I mean, for me, the one mistake I've made was I got my position on here, probably half of what I would have loved to get on, but still got it on, even though it didn't work out the way I wanted it to. But then it tightened up here, and here I had a perfect chance to add something at 136. If you remember there, the whole thing tightened up on that half hourly chart there.
Yeah.
So that was just a nice sort of coil here. And then, once we come out of here.
Volumes diminished completely.
Yeah. So it's just showed his hand. You know what I mean? So even if you had paid 138 or something, still, I could have added to that position there. That was probably my mistake. I added to this one here. I watched the whole thing coil up in here. I was pretty confident it was going to get to $2. I took most of it off at $2 here. So, was sort of, just having looked at that Fendi, how it traded in the past, looking at studying some of the stronger those names, having gone through the model book, and just seeing how those really strong names, they trade here. So this is definitely a stock to keep an eye on, Chris, as well, because it's already shown, big 100.
How it runs.
And another, yeah. So it's done a 500% move and a 200 or 300% move here. So we know when we go back and look at what WA1 and Sparta and some of those stronger names, they had those 2 or 300% moves and then another 100, 150% moves. So this is, a 300 and a 500 and a 300 other moves here so far. So that's why we got to watch this one, because when it moves, it's going to move big. So, but it's probably going to have a bit of a breather here. Set up again. So we just got to be, we hope it does something time consuming there, just goes sideways for a long period of time, holds up nice and tight. Amen.
Well, you mentioned reviewing your trades, and you've reviewed your worst trades, and I know that you've shared that with us for a couple of years now as how you've refined your system. If you're reviewing your best trades, then that's also great as well. As you're saying that, it reminds me of, I just went and grabbed it from the bookshelf over there. Not sure if you read that one.
Yeah.
So talking about the R's, and I'm really looking forward to that, to what you learn from your best trades. So obviously you look back in 2020 and you optimize it and can over-optimize systems. But that's a great book, which really helps you set up. And with that data, you're talking about David Ryan's advice to his son, Sean.
Yeah.
I've got a whole bookcase of trading books, and I know you've got one as well over your shoulder. It's funny that the best book that you can possibly read is your own trading book, because it's almost like it's written specifically for you. You've just got to have the patience to go through it, the diligence, and sort of put the mirror up and confront yourself that these are my trades. I'm accountable for these. My performance is coming from these trades. And so do you find
the Sean Ryan stuff was actually, his stuff was sort of a little bit more like the Kalamagi sort of style. And I think his win rate. So I think he ended up with about 150, 180% return to kind of finish second in that. And so I finished second. So obviously couldn't emulate his dad and win it, but still pretty awesome effort.
Most people watching this would be happy with 180% return.
Yeah. But what was most interesting there was his win rate. Win rate around about 27%, Chris. So
that's a thick skin. That's a very thick skin.
And but he's saying he, like 4 or 5 of his trades accounted for like all of his profit, whereas all the other ones were probably going to get a few wins, few losses that all sort of cancel each other out. And so I think his average losses are around about 2.5, somewhere between 2.5 and 3%. And I think the average winner was up around 5, 8 or 6 weeks. It was around about 6%. So roughly sort of, not quite 3 to 1, but remember too also. So it sounds like sort of, it doesn't sound like a big enough disparity there, but the thing about what Sean Ryan are doing, he's building a position. So he build it in small and he gets knocked out to small lots, and then he builds in small, eventually adds to it. And then, so he would actually really scale up into some positions. If they kept winning, he would keep scaling into them to the point where, sometimes he might be 40, 50% of his position size in a single stock, but it's winning, you know. And so some of those trades won there. Some of them are really, really big winners. Big positions there. Yeah, like I think he was talking about one stock he was long, and it must have been up to around 50-60% of his portfolio at that stage, because it's sort of grown into a massive winner. Some news came out and dropped 17%. So he's like, you can't have like somehow this one day they did recover and go back up there. But he's sort of saying, you know, that's the risk there, is that, you know, you got to be sort of keeping it trailed there. But yeah, it was just interesting there that it went a fairly low win rate. That's why sort of, you know, if you can sort of scale into winners there, it's almost like, yeah, sometimes flooding away, but it's when it's like sort of Kalamagi and other traders sort of say, is that when that really the best trade's set up, you know to put the foot down. So that's the thing there. Because I sort of look at some of the trades there and think, oh, that was such a, not obvious, but that was the one that, you know, that was the one I'm most excited about. I thought that one was going to really take off there. Like, you know, like, yeah. So I don't feel good, yeah.
You're talking about the initial trade, the small one, which sounds similar to Jesse Livermore's probe trade. And then you're saying building into the position as it's going and growing with you. And sort of, he would call that pyramiding in, wouldn't he? Where he'd just be adding more parcels and more parcels as it went with him. Just partly a function of the margin that he traded on, a huge margin.
Sean Ryan actually mentioned that book specifically.
Right. Okay.
Yeah.
All right. Well, so, I think I've read every single book I could on Jesse Livermore that's been published. But the amazing trader. But if Sean Ryan's using that and coming second in a more recent US trading championship, really shows a testament to that approach to trading.
Yeah.
And but you were going to review those trades. Hopefully you will share something with us in future. We did have a member also ask something about mineral resources, which is great. The members are in part of that conversation and helping us sort of shape the content. So again, if you want to be a part of that conversation, join below. This is something that you'd said, look, like just straight off the bat, we're looking at that. It's fallen from 80, it's south of 40, it's fallen more than 50%. Heavy volume.
30.
What's that?
Definitely won't be anywhere in the top 30.
It's not in the 30-30 list. Definitely no. That's when the name came up. I'm like, well, we know that's not in the 30-30 list. But
it's a good example of sort of why they sort of, you know, because in the past there, I'm guilty of this, is trying to buy these sort of good names when they have a pretty deep sell-off and think, oh, it's a good company, it'll bounce back. But we don't know how far these things can go. And we're seeing with these momentum sort of shares how far they, you know, some of these stronger names can stay. I mean, we've noticed, like we talked about EZZ. I think also there's a couple there that have really been on the list for quite a lot of time. They just keep going up. So that momentum sort of carries on here. So you just don't know. You know, that's the thing with some of these resources. I've been a few cycles there. Sometimes, and it's usually when they look their cheapest too, when the yields are the highest and the PEs are the lowest. It can be a trap sometimes. You know, you're sort of like it. Even I sort of, you know, a few times I thought, oh, this thing's got a PE of like 6 and the yield's like 12%. Yes, that's
get in there.
Yeah, it's a buy. You know, but that's, you know, often they look that way when these cycles turn negative. So, yeah, look, I have had a look at mineral resources. I might cover it in my Tuesday report there. But yeah, I was looking at some monthly charts and levels there just to sort of, you know, just from a portfolio perspective, but it's got some momentum against the risk as well. So I think I'd rather wait for like a low to come in.
And buy it higher, lower, or swing high to something like that.
How it sort of, you know, then it pulls back, makes a higher, lower, then it, you know, tightens up, and then maybe then it comes out of here. You know, so again, we get a little VCP, a little tightening up, and then we get a better signal, and then we can sort of trade that there, maybe with a stop down here. It's a little bit, you got sort of something to build on, you know. Whereas here, we're not. It's a game of chance here, you know. So which is probably what we should be avoiding, and which I'm sort of starting to learn now is that not the best way here. So we look, there's two levels I'm watching there around 30, the other one's possibly 25, but I'd want to sort of see, you know, something first. But I think the smartest way to play it might be to wait for a bounce, come back here and wait for some sort of first high low or a little bit of a tightening pattern or something like, but maybe I think if you remember there, sort of Sonic was a good company as well. That gave a little tightening and up in here, because then you sort of get a little VCP in there, and then you can sort of trade that little congestion as well.
There's also a false start in April, May there, I can see, which would have caught it.
Yeah. So just waiting for that, exhaustive sign and then, higher lows. So this is the beauty of sort of being patient there, like human nature is we want to try and pick the low. We want to be the hero. I bought the stock 3 cents from the low. Big effort appeal, I waited for it to build a high low, and I didn't sit through 3 months of it going nowhere. I just caught a big meaty part of the move and caught it up. You know what I mean? That's what many penny selling tell us, is that we're best off waiting for a consolidation setup. Wait for that sort of sure signs that. I mean, I think about ResMed there. To me, that was one of the best trades that I've had this had last year. But I sat there for 3 months, going sideways here, bang, bang, bang. I could have just waited for the whole thing to tighten up and come in VCP and then trade later on. I could have waited for a few months there, could have traded something else in the meanwhile. And then eventually this come out and then had a massive move here. So, but yeah, sometimes just gotta be patient, wait for the setup. Don't just try and pick those random lows, and lots of good phrases around trying to pick lows there, which I won't go into today.
Right. Well, there's an insight for us, and we're looking forward to you sharing with us what you learn when you reflect over your best trades. And again, members who want to be part of the conversation, join below. We say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.